So it is February 2026. What's going on in the housing market? Mark Fleming, chief economist, First American, said the forces that eroded affordability in the aftermath of the pandemic, strong price appreciation and surging mortgage rates have stabilized. Moderating house price growth, easing mortgage rates, and steady income gains signal to a realignment in the forces driving affordability trends. I don't know about you, I have no idea what that means. But what the good part is, things are starting to stabilize. Home prices are still increasing, but with rates coming down, affordability is definitely helping out. When we look at this chart, affordability improved for the second half of 2025, absolutely. And we've seen this kind of even more now as rates dipped below that 6%. So one of the things that economists look at in the overall economy is how much of your income does the mortgages, come out of it. So the affordable part is probably about 30% of income or less. I think right now we're probably in like that 34 range, 32 range, 2% range. So we're seeing that number come down nationally, which is good. Locally, we are still seeing prices increase. So it's kind of balancing out and probably remaining similar for what we've seen for the last 6 months. Mortgage rates near their lowest levels in 3 years. Absolutely. They're hovering right around that 6%. And that's what we are looking at and what we're excited about. Once again, I think it does a lot for consumer confidence. I do think if you can afford a home at 5.75, you can afford it at 6%. Honestly, if the numbers are that tight for you, maybe now is not the right time to buy. But most people can, and it becomes more of a consumer confidence issue. When we look at kind of what it makes for a difference on a $500,000 loan amount, in January of 2025, the rates were 7.6%. If we look at 1 year, today, February 3rd, 2026, at rate 6.20, that's a difference of $352 a month. And people will look at that. That's a big difference. Maybe that's a car payment still, maybe not. Inflation has crept in. But if it does drop to 5.99, it drops another $67 a month for a savings of over $400 a month on a $500,000 mortgage. And that makes a significant difference when people are looking at what they can afford to buy. And then we look at home prices. They are continuing to grow in our area. They're modest from what they were from a few years ago, but I think we're still seeing anywhere from 2.5 to 7.5% growth year over year, especially in our area. We've talked about this, that the Northeast is doing better overall, and we're looking, for that trend to continue. So far, we're not seeing a downward trend on that. I think if we see a spike over the next couple of years, we can have an issue, but I think it's going to continue on an upward trend there. Wages growing faster than home prices in 2026. That's what's projected. They saw that for 2025. And that's really the first time nationally that we've seen that, which I think is really, really important. People's wages have to outprice the affordability of homes and home price growth. So as we see that kind of balance out, I do see a overall healthier economy. Rick Sharger, founder and CEO of CJ Patrick Company, said, "We're in an incredibly rate-sensitive environment today, and every time that we've seen mortgage rates drop into the low to mid 6% range, we've seen an influx of buyers hit the market." I was talking to somebody earlier today, and I think 6% is that psychological number. When we were in, I think it was June 2022, when rates crossed that 6% barrier, the market took a pause there. I think that makes a big difference. About a month ago when we saw those rates dip right below 6%, we saw a lot of people jump back in. 6, I think, is a psychological number, something to look at, and we've been hovering around there for a while. We'll see what happens as the year continues and what the Fed does overall and see what those rates do, but I think it's important to watch that 6% number. Definitely when rates drop, buyer activity definitely goes up. We're seeing that, go on throughout, supply and demand. We've seen it through the history of how long I've been in the business, and I'm sure we're going to continue to see this across the board there. So Sam Ketter, chief economist, Freddie Mac, said, "With the economy improving and the average 30-year fixed rate mortgage nearly a percentage point lower than last year, more home buyers are entering into the market." And you're seeing that. So when we are in the Northeast as an upward trend on a market, we're seeing prices increase. You're seeing other parts of the country either stabilize or decrease a little bit, which I think is creating a little bit more of a gap for people to sell out of Northeast, especially after this winter, and buy in the warmer climates. And I think that's going to come back a little bit. After the pandemic, that froze because those markets were so hot, for lack of better words, that, now they're starting to cool off a little bit. Florida did get snow this year. So, we're seeing some of that trend continue. I'm getting more and more calls from people saying it's time for me to make make the move, especially after this winter. I'm not looking to stay here and shovel snow like this. So we'll see as things progress, but I think an overall solid market, solid economy. Looking forward to the spring market as everything is going through. If you have any questions, feel free to reach out.